The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. On this Wednesday, the 20th of August, and we're looking at the Dow down 44. It's been holding up much, much better than the general market at 44,879 right now. All-time high yesterday, just by 2 points from the what is today? Today's from early last week, the all-time high. So now what we're looking at is within the context of technique and technical tools. I had shown this and I discussed this in great detail over the Tuesday week when I did my webinar. It's still available. And what I was discussing is this, that the 9-period moving average, which has been a fantastic tool, keeping one in positions much, much longer than you would anticipate, even with any emotional. Look at this, General Electric finally went pink the other day, and look at that pullback that it's had since its all-time high, just 1, 2, 3, 4, 5, about eight days ago. And now look, it's taken this dreaded H pattern. It's about to take out the left side low. Look at Robinhood. I use these are stocks that we've been long for a long time, but I've used them as indicator stocks, clue stocks, I call them. Look at this. Robinhood down 6.77. It's down. It's at 100. It was at 118, double topping in the 117 area for a couple of weeks, about 2 weeks or so. Now look at it, very sharp. But the 9-period moving average hasn't yet turned pink, and it will probably. I mean, there's a really good chance that it's going to. And that makes that 94. Was that 94? Yep, the 93.36 low of the 1st of August. That becomes a target for sure. Wow. Okay. What about Microsoft? Look at Microsoft. Red. So it's turned, well, pink, I call it pink. For the last two sessions you've had, the 9-period moving average turned down. Here is 555 was the high right there. 555, back around about the 31st, I think it was, of last month. And it's now at 507. I would call that a pretty decent 10%, almost 10% correction. So with that in mind, we've now got a different posture, and we are short. We're short the S&P, and I wanted to be short the SOXS. This SMS via the SOXS. I chose instead the SPXS, the S&P, because it's kind of broader. It has the S&P, plus it has the semiconductors. But look at this, up 8%. At 15, up 59 cents at 7.76 in the SOXS. Look at the SMH. And we still don't have bad news. So this is really going to be extremely interesting. I'm going to go through it very slowly. Look. You've got a probable peak G at 302.98 in the semiconductors, and that was on the 31st. No, it was, sorry, the 18th, the 13th of August, 302.98. Then you had, so there was a Chapman 2-bar reversal, because it went to 302.80, just slightly lower, 18 cents lower the next day. That was the high. But it also had a 298. 298 was the open, round number open. That to me is I've been talking about this for a few days. I have no idea whether we're going to have the kind of April of a year ago sell-off when I saw all those round numbers in the semiconductors and many of the other tech stocks. But this is just portraying to me visually that there's an arch formation, that look how the MACD is so much weaker than it was back in the highs that were made in July. Look at the stochastic, now down to 63%. It was looking great just a week ago, up in the 93, 95% area. On-balance volumes turned down. Relative strength has turned down very sharply. I think this is a lot more serious than people would think. So with that said, just in the shorter term, the weekly charts are still amazing, but they are starting to look a little less amazing with the big red candles, and we're only, not even Wednesday, we're barely, not even an hour into the session. So, okay, with that said, let me go one step at a time. The IAI, which is the broker-dealer ETF, trading down 2.16 at 170.21, made a peak E 177.97 high around about the 9th or 11th, 13th of, put the date in, let's just get that date, 8/13/25. And now I can make it red because the 9-period moving average today has gone negative, but this is only a sell signal. There's no sell mode yet. That'll come if we dive down below 168. 167 will upgrade the sell signal. All right, and it's a D in the weekly chart. So if the brokers are starting to pull back together with the semiconductors, believe me, I have a lot of respect for that kind of action. I treat that very seriously. And that's why I'm saying if you have any long positions, for instance, we had CLF. CLF looked like it was doing very nicely. It was in the sector that could benefit with the tariffs. I don't think it's at this point worth getting too excited about in terms of the upside, and so far not even the downside. But we got in at 1060. I put a stop in today at 1029. I don't want to be bothered with worrying about something that could arch over very quickly instead of moving like it was yesterday. It had a good chance to try to get to the 1080s. That would have been good, and then it would have been creeping up to higher highs. This way, it looks to me more likely to arch over. So I said, all right, we're getting out. I want cash. I want cash because I want to be buying back into the positions that we've sold. We still have core positions in stocks like Robinhood, General Electric, even Microsoft, all of which we've got from way down. I'd like to build a position for the next big move up. I want to have patience. So that's important. So I'm even going to say IWM, I don't like this candle at all. I went through this very carefully yesterday, and then again last night, and then again this morning. I said, am I missing something? Because in a Chapman wave buy mode, peak C's should go to at least a peak D. Well, there's something that could happen. I don't want to go through it now, but there's a pattern that I call the Chapman wave. There we go, right there. So this is the unconventional flat base restart. I'm not even going to draw it in. And it says that if you, after a peak D, there's a strong move up, and at any point you start to keep coming down towards the starting point, there's a chance that you're making this unconventional flat base restart. Well, you did. Look what happened. You came down pretty sharply on the 16th of July. You went to 216.91. Well, the high at leg D that went to a peak D was 217.41. So you took that out. Oh, that's the peak of D. That's just a hint to say that spiky Bart Simpson hairstyle. And that just says there was a peak G at 226.74, and then you went all the way to the 200-period moving average. Almost everything that I'm looking at, except the unbalanced volume, suggested that there should be a rally that goes to a peak D. Well, it stopped at 231.40. I'm just saying, be careful. If you do have a position, unless you have a longer-term outlook, and you're prepared. You remember I said, if you're prepared to put up with a pullback, be careful.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi, so we're back. So just all I'm saying is please be careful. I'm prepared always to take a 3% or 2.5% or 3.25% loss, just like that. Bam. Why? Because we can always make it up. I don't want to turn into a 9%, then a 12%, and then I'm sitting there saying, oh my God, what do I do now? Just get it out, and you can always get back in. Please don't let your thinking be swayed by the position. Rather let this thinking be persuaded by the way. Look at the action. Look at this. Now we're $1.09, almost $2 down in the IWM. I don't care about that peak C now because the 9 is above the 14. It looks great. The MACD hasn't yet turned negative. The stochastic's still nearly at 80%, 76%. But the action of the market is saying something's not right. And that to me is way more important. At some point, what happens if we don't take out 212.34 in the IWM and then we hold, say, maybe at 219 or 218, and then all of a sudden there's this huge rally and it goes to 231.47, 1 penny higher. That becomes a D. And all the time you've been sitting through this big pullback. It can happen. I'm just saying, be careful, or at worst, what I would do is take a little bit off the position that I have now, just because it's money management. It didn't do what I anticipated. I'm just saying there were quite a number of people who looked at me and said, oh, at least I could tell, were wanting me to be able to explain this peak C. And I'm saying to you, I've explained it. It has the look of a D, but it's a C. And it should, technically, this should be a buy mode. But that doesn't mean to say you can't go down more. I'm just saying money management says you can always make up. I don't want to make up too much. So question, Ben, my thinking on SIL and SILJ is it will complete daily C and D and then to sell for a timeout. So let me explain this as well. In the Chapman Wave methodology, your objective is to look at the notation, and if you need to correct it, you're not cheating, you're not doing anything. You're doing the best you can, and you go from the previous notation to the next notation. And in this case, you've got a sharp pullback, peak D, sell signal to sell mode, has a good bounce to the 38s from the 36s, and it's come down at today's lows 36.96. So it's gone, it flipped to an S, meaning the 9-period moving average went back to negative, and it's still a peak C. There's no other way I can count that in the weekly chart. All the technicals are still pretty good. And what I'm saying is that because of this potential H pattern, where it is, dreaded H, remember, rolling over from a peak A or a B, I just have to be careful. If you look at the gold, it went right to the Chapman Wave Inside Track Propellant Zone. And it's nicely above it. But that 9-period moving average is still under the 14. The MACD is still very weak. Stochastic is at 25%. On balance volume did give a nice little V-shaped turnaround, but you've got to have price movement. And we've only just started that. So what I'm saying is that when there's an overall selling phase, it tends to take a majority of sectors down with it. Not all, but a majority. And therefore, I'm just saying I would be a little careful. That's why I said yesterday, yeah, you've got to take a little bit off, just part of money management, and then it continued low, and now it's looking quite good. And the 9-period moving average, excuse me, is way above the 14. The MACD just flipped negative, just barely. Stochastic just under 80%. But I'm just saying to you, I would forget at this particular point, just for the moment, because we're talking about the daily chart, I'd say that together with, in unison with the market, you've got the sell. Look at this. You've even got Bitcoin making a sell signal from the 123,615 14th of July high, all-time high, pulls back to 112,000, let's call it 113,000. And then what does it do? It comes back to, it pops back up to 125,200. But look, all the technicals were weak, and they're still weak. And now what we've done is I have to take away, you remember this Chapman Wave methodology is the waveform that never sleeps. So in this particular instance, that was a down arrow. This is that one that becomes an additive to a down arrow, because if the down arrow is correct in the methodology, but you still go higher and then you fail, then what I learned a long time ago is to put this inverted caret, this little pyramid right there. And that adds to that particular sell signal. So now we've got a sell signal almost, because I have to wait for the close. But if it closes below 100, and this is Bitcoin, 113,045, and right now it's at 113,015. It's been lower. If it closes under that, I have to say sell signal upgraded to a sell mode. And the weekly chart is still only in a peak C, looking still pretty good, but starting to roll over in price, but not in the technicals. So I hope that explains to you that I want to go from pattern to pattern. I want to, at a certain point, exclude something like the Chapman Wave methodology notation, but I want to look at other things, and then I can go back and correct the notation to the most up-to-date. The whole idea is to be in the most up-to-date notation and mode that you can be in. So this is what I'm saying. So when you say to me, you're going to just hold the SIL because it should still go to a C and a D, I can't really argue with that. But what I can say is that use money management, and all I would do is if it goes underneath today, if it closes under yesterday's low of 51.93 SILJ, I just have no choice but to say to you, take a little bit more off. This could turn out to be that, you remember the one that I called the double camel hump rally, and goes, so this could be an alternate count. I don't see why it should be, because everything here pertains exactly to peak A and peak B, but it could be an E and an F. But I'm not going that far right now. So yes, just keep in mind that money management is important. I'll tell you why. Look, if it goes back to 54.32, just into the 54s, and you still have your core position, but you've taken a little bit off for money management, that's great, because you can even add to it. You can add back to it. But if it goes down from here and it starts to trade under 51, that is a pretty deep correction from that peak B. That could become a peak B minus. I'm just saying that I want to be prepared for anything. I hope that helps you. And I know that I'm not talking to just one person. So the question here is, what would cause a failure of the IWM? So let me just do that again. And it's worth taking time, because these are questions I think that many people have in whatever positions they have. A failure would be, it's a long way down, but if it closes under 221.15, this big Murabozu candle of the 12th, I just have to say, if anything, you got time before you can get back up, but be careful, because that could be a big arch over. But we haven't done that. I'm just saying that's what I'd be careful of. All right, hope that helps you. I'll be back. Dow's down 87, S&P's down 49.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
So 457.22 was the most recent high in MicroStrategy. And that was on the 16th. Then it had what I call a Chapman wave 2-bar reversal. That's a tidal reversal, and it happened to have a 456.00 round number high. So 456 round number high. The actual high on a doji, I had a webinar on this years ago. I developed a technique that I called the silent doji candle. And what happens is at the outer end of a move up or down, that could turn into what could be a serious reversal, a change of direction. So 457.22 on the 16th, 457.22, 457.22 on 20. I think I said the 16th. I'll just put it in. I'll put 15th. 25. The very next session has a round number 456, the doji candle, that silent doji. Whoosh! Where's the trading right now? 331.41, down 5 1/4, under the 200-period exponential moving average. That was a peak F, but the previous major high was, I believe this is the one. No, it's right here. I'll open this up. MicroStrategy. What am I doing here? There it is. Okay. Was 500. Oh, it sounds like Microsoft, right? 555. This went to 543 round number. I had this notated, but then either it did a split or it did something and I completely forgot. 543.00. Oh, what a technique. 540, I didn't see it. 543 round number all-time high. Ay. All right, so that was 543 round number high, pulls all the way back to the 200-period moving average in the 255-ish, 260 area. Then double bottoms, rallies all the way again, and then rallies to 457.22 on whatever I said it was. Let me just double check the date. That was on the 16th of July, and the very next session, what does it do? It has a round number, 456 high, and that was it. So, and it's a peak D. In the weekly, I can't put a down arrow yet because it hasn't gone pink, but it has gone 1, 2, 3, 4 sessions underneath the 14-period moving average. So I got to watch the answer potential dreaded H in the monthly. Yeah. So this is right at where it should find some support, but it's not. 336 is the 200-period moving average. It's trading at 332 after tagging a low of 325.55. So yeah, just be real careful. So one of the things that I'm doing for subscribers is we built up some cash. We know what we would like to get into because leaders stay as leaders until there's a complete change of texture of the general market. Number one, I said I'd go through this earlier. So I did the one thing, and I was just talking about the 9-period moving average, how for some key stocks, you've finally gone pink instead of green. That's important. But here's the other thing. We've got a rotation. You've got the Dow, which is now down 110, struggling to go down, in fact. It has so much strength. But it has already gone to a leg F in the weekly chart. This is amazing. Whoa. I think that continued. Yeah, it's still a leg F. It's not a peak F because last week's 45,203.52 high was surpassed 45,027.39. So this is still a leg F. Could it be an instant restart? Well, look, instant restart, yes, but you've made a lower low. I don't even want to go into that right now. It doesn't pertain to what we're looking at. What we're looking at here is there's a divergence, and the divergence is that the S&P is rolling over. It hasn't got a sell signal yet. We are actually short. But that's not the point. The point is I'm trying to protect our long positions that we have left. I also am trying my very best to use the short side to tell me that we might pull back. And like last time, I don't think it's going to be the case, but like last time, we didn't see the 9-period moving average cross pink. It stayed green. That's like a spring-loaded trigger that powers you to the upside, which it did. Right? So we've gone to a peak G. It could turn out to G/B, but it's probably going to be a G. I don't want to guarantee that yet, but it is already a leg D and probably a peak D in the weekly chart. Wow, I mean, we're catching up. When you get to the Ds, you've got to be a bit careful. But wait a minute. It's only a leg B, probably a peak B in the monthly chart. But look at this. Now we've accelerated down 9 in the QQQ at 560. Look at the SMHs. SMHs are down 7.62, almost tagging. And if we do this H pattern, we take out for 2 out of 3 sessions, we close under the 279.19 low of the 1st of August. Then you've got yourself a pattern that says, be careful. Now you've got to start looking at left side support levels in the SMHs, and that's 278.55 from the 7th of July. But most important is the one on the 1st, where you really started a huge move up, and that was at 272.16. Don't want to get carried away. The 9-period moving average hasn't turned pink yet, but we're watching it very closely in the semiconductors. Look at NVIDIA. I've spent a little time on this for a week already. I said there's a double top. 183.30 was in July the 31st, pulls back quite sharply, and then it goes to 184.48. Less than $1.25 higher on the 12th, and now you've made that double top, and all the time they were weakening technicals. And you've taken out the left side low of the 1st. That means that your target now will be this target right here. The 22nd of July, it goes to 164.58. And you've got upside. Look, just today alone, the high is 175.16. That's over 5 points higher. So to take that out, you'd have to probably go to be able to have that green 9-period moving average stay green instead of going pink. Wow. Tomorrow, without going much lower, tomorrow you'd have to have a really good bounce to change that. And that looks a little difficult. Now, that's the second thing is the semiconductors, the QQQ, and the areas. You've only got the Dows being strong, and you're starting to see a little bit more weakness in the IW, and that makes me a little cautious. Third is that, it's a combination. It goes together. The volatility index has spiked up to the 16s. It's not up in the 21 area like it was in those 2 sessions where there was this huge move up. It's kind of slow, and we've already rolled over in many areas, not the Dow, only Dow just today. So this just says to me, you got to watch that. But even more important, you don't have the bad news, the news that just is filtering through the economy, and it's not there. Where is this bad news? So that's a missing ingredient, a big one.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds for both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Yeah, so let me just do this again. So we still have our core mining, and I was a little concerned because it made a peak D the other day and it's pulled back. But it's still holding pretty nicely. So I understand the position for those of you who are in the gold, especially the silver stocks. Another one that I mentioned the other day, HL, Heckler Mining, I've got this as the B. And look how it's held. Ugly candle yesterday inside bar. That's why I'm saying I wouldn't want you to get out of everything. I just saying money management just says if you're kind of nervous about things, take something off. Okay, just clarified that. So here's another thing that I was looking at in terms of, it's fascinating because, look, here's Ford. Ford is actually holding pretty, I mean, the monthly chart looks horrible. Weekly chart looks right on the 200-period moving average. The daily chart has had rallies, and you would expect in this environment that companies like Ford and General Motors, they would be down at the lows. But look, General Motors, that's what I'm saying. This is not a unified, this is not like everything's doing the same thing. Look, General Motors goes through peak D. I'm doing this live now. Peak D right there. That's your objective in a buy mode. Then it pulls back sharply to the 200-period moving average. Ugly red candle. Whoosh, the next day it has the exact opposite to the upside, breaks out, and it goes peak A. Look at this. A, B. That's a parallel high. Yep. C and D. I just need to check that it could be 1 penny off, but I think it's very close. Yeah, it could be 1 penny off. 54.75, 54.75, right on there, right? So it's in a leg D. And it's only down 28 cents at 56.78. So that's why I'm saying you've got to do your homework, and you cannot be afraid of the market. You've got to try to. It's very hard to do, believe me, because I've already just made a mistake over the last 2 days, wanting very much to do something and then talk myself out of it for some reason. This is my own stuff. And it's just dumb. I mean, you just look at it and you say, gee, why didn't you believe yourself? But look at this, leg D in the weekly underneath the previous major peak D in the 60 area. This is in the 56s and holding. So I'm just saying to you, do your homework. Be prepared to look at each position on its own merits, and that's really important because you can get really confused by there's a sector that's just so overboard. And this is a little concerning to me. For instance, when you go to, let's go back to NVIDIA, the leader, and I've talked about this for a while. I've said this particular move up, a single leg A from 86 back in April, going straight up, not a single week, not a single candle has a lower high until this week. And it's gone all the way, and it's got earnings out on the 27th. and today's the 20th. So it's a week to go. It could be much lower down. It could be spectacular earnings. And then what happens if it pops? It doesn't matter, because the deeper it goes down now, the more the market is saying, now we're looking at, it's not what you've done for us lately, it's what you're going to do in the future. So I'm just saying I'm a little worried, because I'm anticipating that it's going to take quite a while, meaning weeks, not days, for NVIDIA to get back on track, to be able to have all the benefits, everything was in its favor. Everything turned out to be in its favor. Whether it was a tariff, whatever it is. It might not be. And we might even see a rotation. Let's see, we advanced micro device. Look at the massive move. We went to a peak D, a leg D. It could be a peak D this week in advanced micro devices, under the previous major high of 227.30 back in March of 2024. But it went all the way down below 80. And then it's come back to 186.65 at peak E, with the technicals failing. This is a little concerning to me, but we might get a rotation. That's my point here, that it might be, who knows, or maybe NVIDIA comes back. I'm just saying that I'm a little concerned. I don't know what all the positives will be for NVIDIA in the next round. We might be seeing a rotation. And that's the reason why I'm monitoring very closely how the IWM, the Russell 2000, does maneuver over the next 2 weeks or so, because will it start to lead? It was doing very nicely. Now it's starting to stall. Okay, with that said, I needed to get to, I wrote it down. So look at this. I always say that the beauty sector is always the last to go in any big turn down. Well, ELF had a very good rally, not the all-time high. All-time high was a double top round about the 220 area in 2024, and then it tumbled. Pulled down to 95 was the most recent. No, it's actually been down to the 40-something area. Then it went to a peak A, peak B, peak C, and now it's stalling a little bit. Still with the technicals good. ELF Beauty Inc. products. What about Ulta Beauty? Ulta Beauty trading right now at down 4 1/4 at 512.28. 534.10 was the peak G high just recently. This is a leg F, maybe a peak F. Could be an instant restart. You never know. But 560.60 was the May high of 2023. Tumbles down to the 309 level, 309.01. Back in March of 2023, and now it's gone straight up to leg B. 574.76 was the double top high, and the most recent high was 534. Still away, 40 points. It's about 8% away, but holding well. And then there was another one, odd, that I'd mentioned a while back. It's a company. They do their own products. And it sounded like a great story. And lo and behold, it did have a good rally from the 20-something area, 25-ish, all the way to the almost 80, and then it just stalled. And now it's looking bad. So you can see, even in a particular sector, it doesn't necessarily mean that everything's going to go in coordinated manner. All right? Another thing I want to look at was AZO, all-time high. As we're speaking, all-time high, 4,187.39 was the high today. Leg F, leg D in the weekly chart. AutoZone. I've been speaking about. I feel so stupid. Only reason I didn't get in was 4,148. Even if you just get a little bit, but a percentage is a percentage, going from 36 to 41, $5, not bad. So just take away the 2 zeros. But look at this, all-time high. Well, other one, Orly is not at an all-time high. It was just a week and a half ago at 104.86. Today's high is 104.53. This is going to be a little double top. Peak C in the weekly chart, leg D in the monthly. All-time O'Reilly Automotive. And then you get AAP. Now, this is fascinating. Look, AAP's Advanced Auto Parts. 70 round number high and open on the 21st of July, red candle, leg D, peak D, and it's starting to fail, dreaded H pattern. As I say, you've got different things in each sector. You've got goodies and baddies. So this is going to be very interesting. If AZO finally starts to turn down sometime in the next 2 months or so, that's going to give us another indication completely of the whole area, the automobile area, and we'll see what happens from there. I'll be right back. Basil Chapman, Tiger Conditions Hour. Dow's down 180, 118, S&P's
Sharpening
64.
your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, so we're looking at the SMR. A question came in about New Scale Power Core. I drew this in, I think it was yesterday or the day before. I said, be careful, it's arching over the peak C1, C2. It's like a peak D in the daily, peak D in the weekly, a leg E going to a peak E in the monthly. And here it is, down at 30.74, down 1.92. And it's got this arch formation, left side, right side, price time match. And it's got the Chapman wave inside track support, target line, and it's going right through it. So just be careful. The 27.50 to 200 period moving average could be a target. Now, let me just do that quickly. So in my subscribers to my opening call, I'm trying my best to at least negotiate and navigate these particular, the Straits of Gibraltar to get you through, as I always try. But most importantly, the S&P, which is between the Dow and the semiconductors, I would have preferred to have gone into the semis as a short, single digits. Instead, I chose the S&P. Why? Because it's just a little broader. I just want to be as specific for this particular moment, and it's so far it's working out very nicely. So we built up cash. We try to put as little money to work right now as possible, and very low price. In this case, it's in the $4 area. So if it works out, it'll be great because it'll be a really nice. If it works out, it'll be a nice percentage gain for very little. And it's just part of the portfolio, and that's the way I want to do it right now. I spent time on my Tuesday weekend in my webinar talking about money management and what you can do and how we try to negotiate these turbulent waters that I anticipate coming up. And we still haven't got the bad news yet. So until we get the bad news, we won't get this confirmation of a 65-point decline in the S&P, but with a 560-point decline in the Dow and the NDX 100 will go down to the same point. We haven't got that yet. So I'll be back tomorrow. Have a great day. Stay tuned for Steve Rhodes and all the great programming, and check